Hi everybody, it's FIBO Group and you are watching to the Market Watch review. The dollar surges into the weekend amid falling stocks and rising rates. After falling yesterday, the euro was sold at $1.08 despite a stronger than expected flash April PMI. Sterling has fallen to new lows due to poor consumer confidence in the UK and sharp declines in retail sales. The beleaguered Japanese yen continues to consolidate its recent decline and is still within the range. Most Asia-Pacific equities fell. Europe's Stoxx 600 fell and is currently lower this week. U.S. futures are also falling. The gold price is down around $10 to $1940. Last week, it settled closer to $1978. June WTI consolidates in a range of $101 to $104. Asian Pacific market. Yesterday, a senior IMF official admitted that the weakness of the yen is a reflection of economic fundamentals. The Fed is tightening, the Bank of Japan is not. Japan's data indicated that the economy is recovering and that energy-led price pressures are decreasing. Japan, however, is still experiencing deflation, even if you exclude fresh food and energy. The dollar continues to consolidate against the Japanese yen and is still within Wednesday's range. The 5-day moving mean is slightly higher than JPY 128, but the greenback has not closed below this level since April 1. Australia's April flash PMI indicates that the economy is gaining momentum. The central bank will likely increase rates in June after Australia's next month's national elections. This is to start the tightening cycle. The Australian dollar fell again yesterday after a reverse move. Market of Europe. Preliminary PMI data for the Eurozone defied all expectations that activity was being affected by the conflict in Ukraine. Both the service and manufacturing PMI were higher than expected. Yesterday's euro fell after it rose to $1.0925, a result of some hawkish comments by the ECB. The single currency lost 1 cent against its high, and the result of follow-through selling saw it fall below $1.08. The UK is less fortunate. Today's data showed disappointing results, beginning with a slump in GfK consumer confidence. But the shocker was March retail sale. Sterling is now at $1.2830. This is the halfway point in the rally from the March 2020 low, which was close to the high last year. Market of America. Yesterday's comments by Powell, the Federal Reserve Chair, reaffirmed what markets already know. The Fed chief supports a faster pace of tightening. Although flash PMI headlines might attract attention, they may not have much effect unless there is a significant downside shock. Macklem, the governor of Bank of Canada, also supported a quicker adjustment of monetary policies. Yesterday's U.S. dollar traded at CAD 1.2460, but the greenback was able to catch a bid as equities fell lower. It is now at 1.2680. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.